Hi, everyone. Today, let's go over the economic calendar. Then we'll talk OPEC oil just for a minute. And then we'll talk manufacturing from China. And then we have some charts to go over before we start the week. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this almost every day, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Starting off with the economic calendar, there's not a lot this week, but there are a few things here. I do want to mention initial jobless claims on Thursday, December 8th, and we also have PPI here on the 9th. Those are really the only two things that are important this week, in my opinion. Factory orders, somewhat relevant as a predictor of future economic activity, but not as important as the things we saw last week. Moving over to OPEC oil, they are continuing to say that they are going to reduce production, even as NATO looks to ban Russian oil, which definitely could create some issues with supply in terms of oil and cause oil prices to tick back up again. This definitely would be a shift in the overall economic picture in terms of oil. You can see here they talk about banning all Russian crude, and oil prices having fallen from 120 down to 90. This could certainly threaten that if OPEC decides that if they're going to continue to reduce oil output, which is basically a way to keep prices high, their profit margins higher. On a global note, that also makes us a little bit more hesitant in terms of banning Russian oil, because we're going to have to pay a little bit more for that oil from OPEC. Moving over to manufacturing from China, they say it's down 40%. If manufacturing is down 40%, that certainly is going to be an issue for companies that transport things from China to the United States. You can see container volume is also down 21% just from August to November. Hopefully, this is just a resettling back into the more normal prices and more normal manufacturing range. Obviously, it went down quite a lot during COVID, went up really high as soon as we reopened, and hopefully this is more of a normalized range in terms of production and transportation costs, but it definitely looks pretty steep from where we were, and hopefully this trend does not continue. News like this has already been impacting iPhone sales and the stock prices of the companies that manufacture their devices in China, and this could be another indicator that it's going to continue down, and they're not going to be able to produce the things that we need in high enough quantities. If that does happen, that can always increase inflation and put us back in the same position we were earlier this year. In other news, the Pentagon debuted its new B-21 Raider. Not relevant to the economy, I just think it's cool, and it was on CNBC. Check this out on your own if you want more information. Moving over to the S&P on the weekly chart, you can see we had that weekly close right at resistance, the one everyone's been talking about. The question is, are we going to go a little bit higher here? Maybe touch the 55 EMA, basically right where we did on the previous rally. I've heard comments like this rally is more steady. It's already had several pullbacks. It wasn't as direct. It's hard to say exactly what that means, if this is going to sustain itself, or if it's just because we know that we're in a downtrend and people are less willing to buy in that kind of a market. But either way, I'm still looking for a downturn, whether that means 10 points higher and we come up and touch this and we come down and retest. I think it's a fair argument to say that we come up and retest and we create a higher low here or maybe a double bottom. There is certainly some strength, and I've talked about it before. This looks more solid. We've held up pretty well here towards what I think is the end of this rally, and I wouldn't be surprised if we came in and double bottomed or maybe went sideways from here. Moving over to the NASDAQ, once again on the weekly chart, you can see big green candle here last week. We're going to shift over one. It looks like we're going to come up to maybe 294. I don't think this resistance is going to break here on the NASDAQ. It's been pretty weak here recently, and it's been weaker than the other major indices. I would expect this to come down and at a minimum create a double bottom here, going all the way back to around 255, maybe stopping a little short at 260. But either way, this looks weak. I don't think we're going to come up and break this resistance, and I definitely don't think we're going to break out and create a new trend. Moving over to the Russell on the weekly chart, we did come up and tag that 144 EMA, paused right there, similar to what we did last time. And then we did push up a little bit higher last time. Does look like we're going to get that 55 and 144 cross here, potentially next week or the week after. And then, like I said, I suspect this is going to move lower, but maybe not as low as last time. We already have a solid double bottom here in the Russell. I would expect this to come down to around 170, 175, this zone back here, down here in terms of the pullback, and then I would hope for a continuation from that point. Moving over to IYT or transportation on the weekly chart, you might get a tag of that 55 EMA, similar to what we did here in August, which would mean we have to go about 5 points higher than we are right now. So not too much further. Come up, tag that level, and then we get the pullback. You could certainly expect a pullback to maybe 207, maybe get that inverse head and shoulders pattern. Seems like the most likely situation here on transportation, but it does seem like we're going to go higher a little bit here in the short term, come up and tag, and then create that second bottom here. And like I said, I would expect buyers to come in right around 207. Looking at XLP just briefly, I did talk about it in the last video, but we are creating what looks like a double top in my opinion. And I certainly think the risk reward is to the downside. There's not a lot of reward trading bullishly here, and that there's going to be a significant amount of risk. I would expect a retest of this level if this rally is going to hold, which would mean we need to come back into this 72 level before we get a continuation higher or at least sideways here on XOP. Moving over to XLK, technology sector. Usually you would like to see this leading the rally, but that's definitely not what we're getting here on the weekly chart. This looks weak. We've been going sideways basically for 3 weeks at this point. I would expect about 138 to be the high here, the previous high that we interacted with here in September. Come up to this level, and then the sellers are going to come in at that point. And then we'd be looking for a buy point somewhere around 120 if we see some support, or there's certainly potential that we create new lows here on XOP. This is definitely one of the weakest sectors, and it continues to be weak in the face of inflation. Moving over to XLV, you can see we've had a big rally from the lows, double bottom type situation. Certainly looks like we might be getting a little overextended here. Same zone we got into in January and April. The August rally here was a little bit weaker on healthcare, surprisingly. But this looks like a sideways market in my opinion. Definitely looks like an accumulation area. You could certainly argue that the momentum on this rally has been very strong, and this might be the creation of a new rally. But remember, this is healthcare, and you don't necessarily want to see healthcare rallying if you want the rest of the markets to move higher. It's usually an indicator that people are moving towards safety, and they're moving away from growth and the more risky investments. Moving over to stocks above their 200-day moving average on the weekly chart. You can see we are still very elevated here. We're in the same zone that we were throughout December, basically at the highs, but we have not rolled over yet. Definitely at the point where you could expect this to roll over at any time. And this is something that I'm watching very closely. We'll see how this opens up next week. If this does start to fail, that should be a pretty good indicator that the rest of the markets are going to roll over. And once again, we have a double bottom here. I know this chart doesn't work quite the same way, but you could certainly expect this to come back into this zone perhaps before we get any kind of support. Moving over to XOP divided by the M2 money supply on the weekly chart. Looks like we're getting an overthrow of that trend line. I thought we might turn around right here last week, but that didn't quite happen. You don't expect this to go any higher than the 144 and the 55 EMAs, which is just a few points higher. We almost tagged it last week. Looks like we might double tag or come in and touch that one more time before we get a move down. And then we have some support, kind of like an inverse head and shoulders. Once again, one shoulder, we have the head slightly lower here. Then we come back in, create that second shoulder, and perhaps the bottom is in at that point. Moving over to the dollar, you can see we've been in this big downward pattern. At this point, you have to expect the fact that it's going to come down and touch this 55 EMA, in my opinion, which is currently trading at 103.15. That would be a pretty big move down if the dollar does continue to move down from here. Then we should expect stocks to be at least stable, if not going a little bit higher. The dollar was pushing around the stock market for a while, but it's kind of a tough situation when the dollar is falling and stocks are at resistance. Moving over to JNK on the weekly chart, this looks quite strong. You had that big move down, came in, hit 91 or so, rallied from there, made a new low, but it does look like we're kind of breaking out here. You do have to treat this like a rally like it has been. The question is, do we come up to this area and touch the 55 EMA? It would probably take us a couple weeks to get there, but that would mean that growth and technology might be going slightly higher. And similar to the S&Ps, you can say there's definitely been a lot of pullbacks throughout this rally. It does not look the same way that we saw here in August, where it was very quickly up, very quickly down. This has been choppy, slightly up and to the right here, almost like an accumulation rally. Moving over to TLT on the weekly chart, you definitely should expect this to come up to 110 next week. It's right in the zone. And we finished a very strong candle, just a few points higher. We're going to hit this previous level of support, which should be resistance at this point. This rally is pretty dramatic. Could overthrow it a little bit, maybe get to 113.50, 114, which would be the previous low here in May. Does have a lot of momentum, but it's covered a lot of ground so far already. This is one of those indicators that's showing us the market may have bottomed a little bit and that there is some desire to hold financial assets once again. Moving over to the volatility index on the weekly chart, you can see lots of big red bars here. Question is, when does this turn around? We are already at support from March and from August. Certainly argue we're at support here from December as well, but it could go a little bit lower, maybe down to 1650. Certainly an argument for 1750, somewhere in this previous level of support. Markets usually go a little bit further than you think they will, and this might be one of those opportunities for the VIX to go a little bit lower, maybe even down to 15. If we do get to that point, I definitely don't see any reward to the upside, and we do have to be very cautious with the VIX, even as low as it is right now. Looking at my positions just for a moment, you can see I'm only bullish here on the IWM for Monday. I have no other positions going into Monday. The markets are pretty mixed for me, and anytime I'm not very confident in one direction or the other, I sit it out and wait till I have an opportunity. It's definitely okay to wait and be a little bit more patient until you're comfortable with the trade, and then pull the trigger then. Let me know down in the comments section what you think of the markets, or if there's any charts you would like me to go over, definitely put those down there as well. Make sure you like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Good luck in your trading and have a great day.